Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, October 23rd, 2013. I'm Bill Duryea with Follow the Bots. After breaking out above the prior multi-year high at 1727. During yesterday's session, S&P futures rallied up to a new multi-year high at 1754. After rallying up to the 1754 price level, the market reversed direction and pulled back in search of support. The selling pressure ended when the S&P traded down at or near the previous highs at 1744, 1743. Buying interest entered the market and the S&P auctioned back at or near the opening range high. During the overnight session, S&P futures sold down below Tuesday's settlement, traded down below the minor support level at Tuesday's low, and pulled back at or near the fractal lows that developed during Monday's auction down at 1735, 1736. During the pullback to Monday's low, the sell programs ended. S&P futures auctioned back up off the low and traded back at or near the lows from yesterday at 1744. Market structure indicates where the buying interest and selling pressure developed during the recent history. Market structure is a valuable indicator inasmuch as it tells us where we are likely to see specific reactions to future market development. In the context of the overnight sell-off and the retracement back to yesterday's low, the market structure indicates that the buyers at yesterday's low between 1744 and 1743 were disadvantaged in the context of the overnight sell-off. Therefore, we can draw the inference that on the retracement back to what had been support, a percentage of the buyers experiencing an offside position due to the overnight sell-off would potentially want to take advantage of the retracement back to the prior low to exit their long positions. Thus, we could expect to see selling pressure on the retracement back to what had been previous support. Similarly, the pullback down to 1735, 1736. All market participants witnessed the S&P auction up to the new multi-year high. Traders who missed the opportunity to be long at Monday's low had the potential to enter the market at a more favorable price than the highs that we witnessed during Tuesday's session. Thus, we could expect to see a buy reaction on the pullback to 1736, 1735. For a more detailed look at today's market developments, we'll turn our attention to the 5-tick range chart. Here we see the retracement back to what had been support at or near 1743, 1744. Note that as the market retraced back to what had been the previous ideal long location, the computerized trading algorithms ceased executing to the buy side, following the lack of interest to auction the S&P back up to Tuesday's high. Selling pressure entered the market. The order flow sequence, as indicated by the digital filters, turned down, and the S&P sold down to Monday's low at or near the 1736, 1735 price level. During the pullback to Monday's low, the computerized sell programs ceased executing to the sell side. Buying interest entered the market, and the S&P auctioned back up at or near today's opening range high. The pattern of market development illustrated on the 5-tick range chart is not an isolated instance. There are numerous examples wherein, when the market breaches support, it encounters resistance on the retracement back to the prior support level. Similarly, when the market pulls back to a more ideal trade location, a price point from which the market has rallied significantly above, the likelihood of the market encountering a buy response has a high probability outcome. Coming into Thursday's session, there is minor resistance at the midpoint of the developing trading range, at or near today's opening range high at 1744. Resistance is now located at the multi-year high at 1754, approximately 19 points above today's low. Minor support is located down at today's low, 1735, 1736. The most significant support level remains the prior multi-year high down at 1727. In the event the S&P fails to auction back above minor resistance and pulls back to today's low and breaches support, we would expect to see a buy reaction during the pullback to 1727, 1728. There is a minor support level above that, located at 1730, 1731. That concludes today's recap of the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.